All right. Welcome to another edition of the Forecast Contest weekly discussion. Our guest host, our special guest host today is Mark Russo from Riskpulse, and I think we also have some other guests here that from industry, and I'll let them introduce themselves here in just a minute. In terms of today's format, we're going to follow kind of a similar theme from the last couple of weeks. We'll start off with attribution, take a look at the forecast from the last few weeks. I'll lead that, but then anyone is welcome to join in. And then we'll switch to this week's forecast. We've started a new thing here, and this is in particular for Mark, where we've asked our forecast contestants to try to go through a mock kind of client call. So like imagine, like you have to do often, Mark, you have to do a 2-minute quick sort of download for an important client, and you have to give them sort of all the main takeaways of the forecast. That's what we've sort of asked our students to start working on and practicing in the pursuit of better communication. So we'll also do that, and Mark, on your end, we'll ask you to put on your client hat and kind of critique the students and try to provide feedback as if you were a client. So, all right, before we get going, is there anything else anyone wants to bring up for today's call, or any specific topics that they want to make sure that we cover in the next 50 minutes or so? No? Okay. All right. I'm going to switch over here since we're going to start with attribution. I'm going to switch over to the last forecast verification. And I believe that's, we issue the forecast once weekly. So the most recent verification here, our forecast issued, the 16 to 20 day forecast issued on November 19th. And the verification period was December 4th to December 8th. So again, I'm going to cover some of what I think are the interesting points here, but then please, anyone can jump in. All right, so first of all, looking at the verification for this week, we see it came in at around 115 HDDs. These are national HDDs, which basically is kind of concentrated in that Chicago, New York, Atlanta corridor. So just a quick glance of the scoreboard here, we can see that it came in under, right? Most of the forecast, in fact, all the forecast here. So in this case, it came in warmer than expectation. The 30-year, just as some reference points here for this forecast, was almost 130 HDDs. The 10-year was 122, and then we had a range of forecasts from 137 down to 122, and as I mentioned, the verification was 115. So, clearly this forecast surprised a little bit to the warm end. This is not the worst forecast we've ever seen, but clearly it was warmer than any of in our distribution. Now you can see the CRPS scores are relative. That's our performance metric, and these are relative to the 30-year. So you can see the 30-year gets a 0 here, and any of the forecasts in general that were closer to the verification than the 30-year got positive scores, meaning good, better than the 30-year, and the negative values were worse. So I guess, a couple of the forecasts that stand out here, Paul Roundy, Professor Roundy has started to produce forecasts in the contest, and he had a really good forecast here, one of the better forecasts, the best human forecast, I should say, going with 125 HDDs, which again wasn't perfect, but as compared to the 30-year normal, it was warmer, and it was, it was a positive score. So, yeah, that's, I think, maybe just a couple other points here. We usually try to point out the ECMWF and the CFS. The ECMWF and CFS, at least as benchmark to the 30-year normal, did not provide, significant help here. They were, the 30-year normal would have given you a closer answer, or a better answer anyway, than the ECM CFS. And in a second here, I'll look at, I'll toggle over, actually I'll do that now. I'm going to toggle quickly over to the heating season to date. And so the heating season to date includes forecasts that were issued since October 1st. All right, so we don't have a ton. You can see we've got about maximum 8 forecasts. But I just wanted to point out the ECMWF and the CFS, at least, in the heating season so far, have not been very reliable forecast. They've been below the 30-year normal. You can see the scores down here. The 10-year has been one of the better. And then in terms of some of the human forecasts, the guy sitting next to me right now, Zach, has been the best human forecaster. So let me take a pause. I want to look at some maps here in a second, but before I switch over and we look at the maps associated with this period, does anyone want to jump in so far with any additional thoughts in terms of attribution, either for the week or just some highlights of the heating season thus far?
I'll take a quick stab with a comment. I would say even though there's been some pretty interesting longer stretch periods of higher latitude positive height anomalies and ridging poking north towards the Arctic Circle, I've been pretty impressed by the lack of what I would call real blocking to this point. There's been a lot of positive height anomalies poking north, but I have not seen very many instances of substantial red noise ridge features that get launched, birthed at high latitudes, have a life cycle of their own for multiple weeks, that have substantial pseudo external control on the mid latitude pattern, and affect the forecast in those kind of ways, which has made for a pretty interesting volatile cold season thus far. And otherwise, I think the forcing from the tropical convective perspective, along with the response and some of the internal forcing mechanisms from the AAM and AM tendency approaches, have suggested a lot of complexity. And in general, complexity is the enemy of big, strong, nasty, cold or torchy regimes. And I think that's where you're seeing the 10-year normal come into the first place slot.
Thank you, Jason. And I was just to augment some of, I guess, Jason's comments here. Here you can look at, thanks to our friends at Maxar, you can look at some of this is the 500 millibar height anomalies. This is for the first 8 days of December. And if we want to look specific to the forecast period we were just talking about, here's December 4th to December 8th. I think this was our valid period here. So, you can see here, unfortunately, I don't have the forecast map. Actually, I don't have the 500 millibar forecast map, but if we go to, what did I say the the initialization was for that forecast? 19th. So if we pull up the 19th, we can at least get kind of a snapshot here in terms of what the models were showing, what Maxar was showing. So let's make sure, yeah, so I've got the dates right. So this is, again, Maxar's report from November 19th, verifying for December 4th, December 8th. And down here, we can see the EC weeklies and the CFS model and the associated numbers here. And what did we say it verified? Let's go back here real quick. Our verification was around 115, right? And you can see the forecast from the CFS was 128, the ECMWF was 133. So on the wrong side of the 30-year normal. You can see the temperature maps there. And let's just do one other thing here. Let's look at the temperature analysis before we go into something else here. All right, so this is going to be the 2-meter temperature anomaly. Yeah, so this is the 2-meter temperature anomaly for that same period, December 4th to December 8th. So you can see from about almost Pittsburgh was the zero line, or just a little bit, yeah, right around Pittsburgh. And, 80% of the country, with the exception of the Northeast, was basically above normal. And then let's toggle back. Here was the temperature map. I guess you could say, well, I was going to try to be kind to the EC, but I guess if anything, it's exactly opposite. If anything, they had the cool anomalies stretching from the west. I'll blow this up a little bit. The western states into, a weak cool anomaly into the central states with a little bit of a warm bias to the east. And it verified opposite. So that wasn't, even from a spatial instance, that wasn't great, was it?
Dave, this is great that you show number one, the verification, both from a temperature and from a pattern perspective, and what some of the models are showing. This is a classic example of, again, you can't put always a lot of faith into the computer models. You know, we're all weather forecasters. We want to try as much as we can to go with the model guidance. But again, there's at times reasons where you go against the model guidance, where you believe it or you don't. You have your reasons for it. And like Jason said earlier, this heating season up to this point, holy cow, it's been quite a challenging season because of the volatility, and you have all of these different moving parts here across really the whole globe: tropics, Arctic, mid latitudes. There's been a lot of moving targets, if you would, and because of that, there's been a lot of volatility. And my main point here is that models really struggle with this volatility, and just something to keep in mind going through the rest of the season, because at least on our take, this is likely going to continue here much of the season until you get a kind of dominating forcing function out there.
Yeah, I think that's a great point. Hey. Oh, go ahead. Who's that?
Yeah, this is Lynn.
Hey, Lynn.
Dave. Could you toggle back to the temperature anomaly one more time?
This one? Or the map? Okay.
That was the one that we're flipping back and forth with.
Right.
Okay. No, I just wanted to, I don't think this is too nitpicky, but if you go back to the, your other map.
Oh, yep.
Looking at the scale, I wouldn't say verified exact opposite, because these are right, they're essentially near zero, right? Where they have, so it looks like these are pretty much nothing's going on this map, and then it verified warm, right? So
I might be being harsh, right? Yeah. Okay. That's
okay.
That's fair. It's almost a blank map, I think is Lynn's point. I mean, it's very weak anomalies. Yeah. And I was just gonna to add a little another data point on Mark's point about the volatility and stuff. In our heating season sandbox, you can look at some additional metrics, and I just sorted this, and you can see at the bottom the worst performers are the different persistence parameters we have. So looking at persistence as a function of the last 5 days, of the last 10 days, 15 days, 30 days, and so on, and you can see they've been terrible. And I think that sort of also is consistent with Mark's point, the fact that, just because it's been warm the last few days doesn't mean that that's going to be a good predictor or reliable for the next period, because we've seen so much back and forth that.
And Dave, this is Steve.
Hey, Steve.
Not being as connected to the day-to-day forecast, so this is really a question more for the group. But if you go back to the model maps that were mostly normal, is this an instance where taking a 5-day mean might be doing a disservice? So in other words, were the models showing the first part of this 5-day period different than the last part of the 5-day period?
You took the words right out of my mouth.
Yeah, we could look. I don't know the answer, but we can toggle real quick.
That's definitely a thought, because I was just gonna add to my comment before that also furthers what Mark had said. The situation of having a neutral map verifying even extremely warm or extremely cold is rather common, just from the database in my head of volatility statistics. But if it had been something that was verifying completely opposite, that would have been quite rare.
Yeah, and I just did a quick scroll, and there was definitely some variability, but whether it was exactly in that 5-day period or just beyond, like to Mark's point, you could see this is just a couple days beyond the verification period, and you've got this is actually for today, and you've got the big cold pool coming into the Midwest and then kind of coming eastward. I assume for tomorrow. So yeah, I mean that's a fair point too, about that there's a lot of even daily volatility within these 5-day composites, which may make them not as useful.
And to pile on to what we talked about a little bit last week with this group was, I think when I think about where we can evolve as a sort of community here of people who are trying to help other people make decisions, and in the case of the energy markets, make financial decisions. I think we need metrics that are better than a 5-day temperature average. I would love to see us as a community evolve to something that says, hey, the 16 to 20 may validate near normal, but the extremes are going to be extreme, meaning it could be extremely warm followed by extremely cold. And I know we can't do that for a specific 5-day period, 20 days from now. But if there was some volatility index that could be forecast, right, of just saying, hey, this period of time, maybe it starts in the 6 to 10 day and it runs all the way out through the 25 to 30, but just saying that the volatility forecast is meant to be much higher than typical. I think I think people can work with that, right? I think you can make decisions based on that.
Yeah.
Well, I guess one other point, though, also, Dave, if you remember from us looking at volatility on a daily basis, there's that strong peak at day 10 that rapidly falls off to day 15, right?
Right.
So I think the window here is really important. But once you get beyond day 10, the volatility ends up being very low regardless.
But Steve, correct me if I'm right, I think you're also talking about just the actual volatility in the actual temperatures, right? What verifies, like extremes in terms of going from minus 20 one day to plus 50 the next day.
Yeah, that's exactly what I'm talking about. Yeah. So day to day variability.
Mark, is there anything from your perspective, industry perspective, do you see how if you had two 11 to 15 day or 16 to 20 forecast anomalies, and they were both -5 or both +5, doesn't really matter, but you knew that one was going to have much more extreme day to day within it. One day in Chicago it's 10 below zero, the next day it's the 5th day it's +50, versus 5 straight days where it's kind of -5 or +5. Can you think of how that would impact decision making with any of your folks?
That is certainly important, Dave. I guess it depends on really depends on the individual customer. And so there are some of our energy trading customers looking at basically natural gas trading. They tend to be more macro, where the 5-day anomalies, and especially over time, 15 days out, 28 days, where that becomes more important, looking for kind of longer stretches of heightened demand or reduced demand on the other side of things. But then there's power traders that are looking for individual days, and within like either a power week or within a certain week or a time frame throughout the month or throughout a season, where you have those peak demand days, or even on the opposite side too, days where your anomalies are very low, and trying to pinpoint where that is and how it falls into either the weekly cycle or monthly cycle, that becomes very, very important. But it's kind of a customer by customer situation. And I'm just focused on energy. When you're dealing with, we deal with agriculture and then like supply chain customers as well, that also varies, some of which the sensitivity is more individual days. And extremes in terms of like on supply chain protection from freeze. So products that are vulnerable to extremely cold temperatures, and what's the duration? You know, is it just one day, or is it going to be several days that you're below zero? And then that increases the risk of the product freezing. And then like our customers will then make decisions whether to use a certain equipment recommendation to help protect that product from freeze. So,
Yeah.
So if I could build on that, Dave, let me actually try to think about this on a example by example basis. So, and Jason, you may jump in and kick me here if I don't get this quite right. I think you're a little closer, or have been closer to this in the past than I have. But I'm going to think about this from several different angles. First, if I'm a natural gas hedger, right? So if I'm somebody who has a seasonal exposure to natural gas, I think noting that, so what I'm trying to do there is I'm trying to use overall macro market fundamentals to put on a large and stable position. I'm not trading in and out of the market every day, right? What I'm trying to do is figure out, when do I lock in my hedges for the season as a whole? So if I believe that the fundamentals favor rising prices, and that's what, that's what I'm trying to, that's the position I'm trying to express in the marketplace. I'm trying to lock that view. And so if I know that there's the forecast period, especially early in the winter, if I know that the forecast is going to be extremely volatile, meaning -20 to +20, what that tells me is I can use the forecast as they start to express that. So when that really cold forecast comes out, I've got a view, well, hey, this probably isn't going to last. So if I'm looking to try to lock in a high price, I want to do it now, right? Because the price is probably going to run on that cold forecast, because a lot of the market's going to say, oh, well, if that 5-day period is cold, then the next 5-day period is probably going to be cold. You know what I'm saying?
Yeah.
So it helps me with timing my position. And if I know that it's a really volatile period, I can use that to say, now is the time that I should start to express that view in the market. I shouldn't wait because things are incredibly volatile. Or I may actually take the other view. I may say, well, this really warm forecast right now, maybe I shouldn't move. Maybe I should just hold off a bit because it's a really volatile period. So I should wait until the forecast shift to show that really cold that's going to be coming next. So from a gas perspective, I think about it that way. From a power perspective, I think a power trader may sort of wait to try to figure out, because Mark's right, they're more interested in the day-to-day. So is Thursday going to be cold, or is Saturday going to be cold? And if I know that it's really volatile, I might try to stay as neutral as possible in my position until I can get a view of which days are going to be warm and cold. And I just know my life is going to suck because there's going to be really warm days and really cold days. And I have to try to lock in what those days are as the forecast gets closer in, right? And then if I'm a supply chain person, the way Mark described there at the end, where I know that, 1 or 2 days of extreme, I can live with that. It's if we're locked in to a 10 or 20 day period, that's when I need to change my operation, right? And I think that's realistic from a supply chain perspective. A few days of extreme cold, yeah, they have to do some stuff, but they don't have to fundamentally change their operations. If it's a 10 or 20 day period of extreme cold, they need to change their operation. So if I know that the volatility index is high, but the overall temperature forecast is not expected to be over a 10, 20 day period, is expected to average out near normal, but it's going to be extremely volatile during that, I could probably live with that. I know I'm doing it in my day-to-day ops.
Yeah. All right, and we need to switch gears here to the forecast. But one last question on my end, because there's been so much talk about volatility for good reason, I think. Has anyone, that's my question. Has anyone looked at the predictability of volatility? And again, I'm not talking about volatility of the models. but actual volatility. So however we define that over a course of a winter, whether you find that over a daily, daily volatility, 5-day volatility, whatever that metric is. But has anyone tried to answer that question or provide color in terms of whether and I don't mean subjectively, I think we can all do it subjectively, but quantitatively to say, yes, this winter had higher than usual volatility, less than normal volatility, and if so, the follow-up being, has anyone looked at the parameters or the relationships to those kinds of patterns? So is there anything we can say? We're always so focused, or at least I've been, in terms of, hey, is this winter going to be above or below normal, blah, blah, blah. But is it going to be on a synoptic scale? Is it going to be volatile or not? And what determines that? I don't know. Anyone have any thoughts on that? Comments?
Hey, Dave, this is Mark. We've dabbled in it, but that's a huge project. It's an awesome project, and I'm all for doing that. So we've dabbled in it, but I'm not aware, or at least I'm not familiar with anyone. If it has been done, it's just been internal to other shops. But that is on our laundry list of projects. But it is just a kind of a seasonal index of volatility looking back. That would be huge.
Hey, I believe I did some exploratory work in that. The only piece of information I can remember off the top of my head was that the actual volatility is far less than what the models do. The models exaggerate the volatility tremendously in both directions. So reality is never really as volatile as the forecast that we're used to looking at.
Interesting. Okay. All right. We'll make a note of that, and maybe talk about it offline. Maybe our forecast team can think of some ways to help there. But good to know, regardless, that it is an area that needs to be further explored, and there seems to be a lot of opportunity with it. All right. So let's switch over to today's forecast. We can't ignore today's forecast, right? So what's today? The 10th. Michael, how about we start with you, Michael? If you're okay with that, we'll let you kind of go through your process. Again, let's try to do the two minute pitch here. You've got your audience here. You've got a few clients that you're going to be speaking to. Give them your pitch. And then again, guys, Mark, everyone though on the call, feel free to jump in here. You guys are the clients. And then Michael, after you finish with yours, we'll just kind of go around. And anyone on the call who's made a forecast or just has some forecast thoughts is welcome to chime in.
Okay.
And Michael, do you want control or do you want me to keep control?
No, you can keep the screen.
Okay.
Just go whenever, yeah?
Go ahead.
Okay. Okay, hello everyone. My 16 to 20 day forecast is 141.7 HDDs with a 1 sigma spread of 24.4 HDDs. This forecast is slightly warmer than both the 30 and 10-year averages. This is based off of my formula that I'll get to right now. My formula was about a blend of 60% teleconnections, 30% the week 3-4 CPC forecast, and 10% of the 30-year normal. The main weight for my forecast this week, using a newer teleconnection, not newer to anyone else, but I'm using a new one. The EPO showing strong. Showing to be strongly positive, heading towards the 16-day period. So that was a big flag to me, as well as the NAO, PNA, and AO. AO and PNA heading towards current forecast is for negative, and the NAO is forecast to be around neutral. So to me, that means I'd see more of a colder pattern in the west with a warmer pattern in the east. So that's how I came up with my number. As for some risks, the main risks are if the EPO, PNA, and AO and NAO, they don't materialize the way I expect them to materialize. Obviously, if the NAO goes to a stronger negative, that would kind of throw a wrench in some of the forecast things that I'm expecting. If the EPO stays negative, that would also flip the pattern. But both of those things don't seem particularly likely at this time, although there's always a chance if the 15-day forecasts. As for it going outside of the boundaries in this forecast of about a 15% chance it goes beyond or warmer than 125, and about a 15% chance it goes above 155. So that's my forecast. Anyone have any questions?
Quiet.
Question for you, Michael, with I guess from a risk standpoint, just based on what you see starting off the day 16 to 20, or at the end of the 15-day outlook, I guess if you had to pick like one feature that's your greatest risk, what would it be?
I would say that it would be the NAO as being the greatest risk, because right now the forecast, I believe the ensemble forecast of the GFS shows that it'll be around neutral, and I've been kind of monitoring these forecasts at range, and they tend to trend towards neutral and then wind up being, at least for the past month or so, they tend to be either more positive or more negative than what they were forecast to be if they were near neutral forecast. So I would say the risk is for the NAO to be more negative or more positive, which could throw a wrench into the forecast. But I think this time, since it's the NAO, it usually hasn't been negative for a while, so I don't think that'll be an issue, or at least sustained negative enough to give us any kind of sustained cold or cold or enough to influence the pattern, I should say.
Got it. Oh, interesting. Thank you.
Yeah, I guess a question for me, Mike. How's your performance been over the last couple of months, and what have you? Yeah, maybe start there.
I had a little bit of a difficult stretch during the I guess it was extreme cold, I'll call it. Early, what was it? Was it November? I believe it was sometime in November. I don't remember the exact dates. But it's been trending upwards since then. So getting better, I guess, is how I'd put it.
Can you tell us why? Well, it sounds like you've learned some things over the last couple of months. Can you elaborate?
Well, added in a little a new metric, EPO. That's a more recent addition. Past that, pattern changed to a more, I guess, in terms of HDDs anyway, a more normal winter pattern, kind of no extreme cold or extreme warmth. So that kind of helped the score a little bit as well, getting out of the extremes.
Okay. And last question on my end. I've heard a lot of market talk from some of the other groups about that. There's going to be a lot of volatility back and forth. what's your take? Do you think you've got a warmer than normal forecast here for the 16-20? Do you think we're going into a new regime here of just where it's going to be generally warm, or do you think we're going to see a lot of back and forth?
I still think we'll see a lot of back and forth. Just in my experience, volatility usually doesn't translate to, and limited experience, but doesn't usually translate to strong cold anomalies, really, at least not in the eastern part of the country, where you'd need a more sustained blocking pattern, as others have alluded to get any kind of sustained cold or warmth for that matter. So I think we'll continue to see the volatility. It's just I think this will be a warmer week, just based on where I think the temperature anomalies will be for this particular period.
Okay, great. Thank you. Does anyone else have questions for Michael? Okay. Let's see. I don't know, Mark. Would you like to share your view of today's forecast?
Sure. So our forecast of HDDs for the
Sorry, Mark, real quick. Do you want the screen or?
Yeah, I can.
Okay. Yeah,
let's see if I can switch this. Okay. All right, everyone see?
Yes.
Okay, so there's a lot of text on there, but anyways, with our forecast for the time frame is calling for 153 HDDs. So we are beginning to shift higher than the 10-year normal. Our 1 sigma is plus or minus 24. We have edged this this time frame a little bit colder, although our uncertainty is very high at this time given the model volatility and the huge warm model changes that occurred this past weekend. Our reasoning for this here coming up, and this is why sharing the screen, just a couple of kind of how we put together our extended range kind of combined with what the computer models are showing. So, we do have access to the European or the EC Weekly and the CFS maps and the HDD and CDD projections. And so if you just took a look at the European weekly projections, that was calling for about 141, 142 HDDs. Right now, we are higher than that. So we're putting less weight on specifically what the Euro weeklies are showing. So in the middle here, this is part of our energy digest that we issue to our customers here every day. And besides the HDD total, then we have a skew for the Midwest East region. So kind of a proxy for national heating demand. Actually, today we did ease that kind of closer to, well, basically we eased that to 50-50. We were leaning in the cold direction here. But the reason for that is because a lot of mixed variables. So we laid out the variables. If you just take the European weeklies, that's in the warm camp. And by our metrics, it's for the Midwest East, 62% warmer than normal in the Midwest East zone, 38% colder than normal. So a fairly strong or a moderately strong warm skew for yesterday's Euro weeklies, but that's not supported by the non-model variables. And I've listed those out here. I'll talk about these here in a moment, our view on them. Strengthening polar vortex, tropical forcing projections here, starting out this time frame. well, CFS, that is a model, obviously, and then some of the other, we have our, and I talked, I believe Riskpulse was a guest back in the fall, talked about one of the tools that we use, our in-house Temporisk Apollo stat model. That's what's highlighted here, and that is also mixed at this time. North America snow cover that had been actually a cold variable has shifted from the cold variable to a mixed variable. So we tend to put more weight on the non-model variables, but some of that depends on the time of season right now. We are putting more weight at this time with what's taking place in the polar vortex, which I'll talk more about, and then also with some of the tropical forcing and our Temporisk stat model too. Those are the three primary, or the three highest weighted variables. Let me pause there for a minute. Any questions before kind of going into some of the synoptic discussion and reasoning for the variable? No? Okay. One of the things that's been really intriguing here, and actually to start that out, let's go to, if I have this right. So our Temporisk Apollo stat model, and again, this is a combination of both dynamical and statistical. Basically, it's a historical archive of patterns. Think of it as like a pattern catalog. So that looks at the current anomalies around the northern hemisphere, and then looks back in the catalog other times that we had a similar type of pattern, and then the distribution of temperature departures going out 40 days after those specific time frames. So this chart that you're viewing, this is for the Midwest East. It's the temperature anomaly, basically projections, putting together the combination of dynamical model guidance like the European model, GFS model out to 15 days, and then longer term, it's the EC weeklies combined with our statistical model. And each of these are 5-day blocks. If we just focus, there's a lot of information here, but just want to focus on the 16 to 20. Right now, just looking at that specific window, again, here's the European, the EC weekly warm skew, but that's not being supported by the statistical view. In other words, the current patterns that we're seeing historically, that hasn't resulted in as strong of a warm skew as what the European model is projecting longer term. So that's one way to interpret this, and everybody has kind of different interpretations here of the statistical model and how it relates to the European model. I also want to point out that in all of these temperature categories here, you can see there's a bit of a bimodal distribution. And this, my main takeaway here, a point, is that this gets into the risk, in that if we look at this distribution of temperature anomalies, you can see that there are some higher probabilities here historically in the above and much above category. But at the same time, there's also a higher percentage in the below and much below. So you have this bimodal distribution, in that, yeah, it could be really warm, supporting what the European is showing, but also historically in the same type of setup or pattern, there's been years that have featured very cold temperatures 16 to 20 days down the road. So this is a very unique and a very challenging situation here coming up. And also, I think this gets into the timing here. Also, you could start out this time frame warm, and then that quickly gets followed up by cold. And that's our kind of general thoughts why we're calling for 153 HDDs. It's a bit of a transition period, in that it, starting out warm, kind of like what the 11 to 15 day time frame is showing. Let me go. This is our temperature outlook maps here today. Here's the 11 to 15 if you just take like a blend of the European and GFS. But The one thing that we're watching here that's been really interesting, talked about the strengthening polar vortex. If we look at, this is the GFS projection of 50 millibars, and right now the PV is over on the Eurasia side of the hemisphere. If you look at the projections here over time, then the PV, it is going to be in a strengthening mode. You look at the 65 north, 10 millibar winds, that's quickly strengthening here over time, but the PV is moving. And if we look at the longer term projections out like 15 days, the center actually moves from Siberia over onto the North America side. And you're beginning to see now this elongation into Eastern North America if the GFS ensemble here is right. European ensemble is a little bit different. It's a bit more centered right at the North Pole. There is a little bit of an elongation, or there's some elliptical nature of it, but it's not as aggressive, if you would, with the GFS ensemble projections. But what we're watching here down the road is that does this, with the current projections, whether it's EC or GFS ensemble, does that begin to shift closer to the lower 48? In other words, do you have more of a elongation or a stronger elongation into North America? If that does indeed verify, then that would begin to force more significant cold back into, if it elongated into the eastern US, then that cold would be directed east. It could also, and one of the risks is that, this could occur, but the elongation is actually further west. And then you have more significant cold driving into the western US, and then the eastern US stays warm for an extended period of time. So continuing the theme of risk and a lot of moving parts, that makes this current 16 to 20 a very challenging forecast, very challenging. So because of that, uncertainty is high, and it's certainly an interesting pattern coming up, and interesting forecast.
Any questions for Mark? Mark, I had a question. Would you say, so it seems like your forecast is, I think you said close to normal. Is that right? The 30-year normal?
The 30-year normal, yes.
Yeah.
Mm-hmm.
And is it a low confidence forecast? Like, I think is it like higher risk than usual in terms of both sides, or how would you describe that?
Yes. Yeah, exactly. High uncertainty, low confidence. There's one path that could keep temperatures warmer than normal and well above normal in the eastern U.S. But then there's another path that could quickly change things colder as well. So the extremes are, or the confidence is low, and because of that, the risks are, the distribution of risks is heightened.
Got it. Thank you. Any other questions for Mark? Let's see. Philip, did you want to kind of go through your 2-minute drill and tell us about your forecast?
Sure. I can do this really quick since I don't have too much time, but.
Okay.
Right.
Do you want the screen?
You can keep the screen.
Oh, okay. I guess I'll put it on mine here real quick. Give a second.
All right.
Philip's forecast. There you go.
All right. So I guess my approach, once again, is still mostly the weights. I've been trying to adjust it around a little bit recently, since I noticed that my forecast has not been doing too great over the past few weeks, ever since we switched from the warm season to the cold season. And I've been looking more so at the tropical forcing as opposed to some of the teleconnections. Although I guess overall, I'm not too impressed by the model performance with either the teleconnections or the tropical forcing. But overall, looking at the tropical forcing, it appears that we have the tropical convection right now in Central Africa and another weaker pulse east of Indonesia, which I said matches sort of with RMM phase 2. And looking at the models, if they're correct, we should see the MJO signal propagate through the null phase and then emerge somewhere around phase 5 or 6. And I combined both the MJO analog that we have on the forecast contest and also using the lag composites for phase 2, which I noticed was significantly warm for much of the CONUS, especially in the northern and central part of the CONUS. And that also happened to match up pretty well with the CPC forecast, which Mike already went over, where we saw the warm anomalies in the eastern half of the United States and also stretching into the Midwest. And then looking at the teleconnections, at least looking just without looking at the actual map and just looking at the indices themselves, I didn't see too much of a signal for a particularly positive or negative NAO or AO. And I noticed that the GFS ensembles at least appeared to want to bring a somewhat positive PNA as opposed to a negative PNA, which actually looking at the map earlier seems to agree with that. If you look at the GFS or the CFS, you see a positive height anomalies over the West Coast area as opposed to the negative anomalies that we saw with the EC, this map. So I can see that, as you can see, if you use the EC, it appears, yeah, you can see that the positive ridge is more so shifted a little to the east. So it's not quite in that PNA region as opposed to what the CFS had. So looking at that, I didn't see much, well, I don't weight the teleconnections too heavily, primarily because it seems like the models don't do too well in forecasting where these teleconnections will be in the 15-day period. And then overall, putting everything together, I ended up with an HDD forecast of 146.6. And then due to my cold bias, I added a 1 HDD fudge factor. And that puts my forecast in between the 30-year normal and the 10-year normal.
All right, thank you. So it sounds like you've made some course corrections here over the past few weeks.
Yeah.
And you said, so looking at your formula statement, very little weighting goes to the actual dynamic guidance. Is that right? And zero weighting goes to the CFS?
Yeah, CFS, I've been putting it at 0% for the past few weeks. And then the EC, I've been putting at about 5%.
Got it.
Yeah, and that I guess does two things. One, it sort of limits the double counting issue that you have if you have both the tropical guidance and the EC weighted about equally. And then the other thing is that, as we saw, the EC has not been performing very well so far in the cold season.
That's right. That's right. Okay. All right. Great. Any questions for Philip from our clients?
No, not a question, but just a comment. Philip, you mentioned with the just there about the lower skill with the European weeklies, and yeah, that's been certainly an important feature this season. In some ways, it's a bit disappointing because the European has always had a pretty good track record. Again, it hasn't been perfect, but it's been struggling, and it even goes back to this past summer. It was struggling too. So even with the upgrades here of late, both with the European weekly or both with the European and the GFS, that still models are struggling, and something's not quite right with them. even within the next week or 7 days. But that was good note, and interesting forecast.
Yeah, I think that's. I know we're almost out of time here, but that's always like a dilemma for me. On a weekly basis here, it's like how to deal with the EC and CFS. Do you just completely throw it out? Do you put 5, 10, 20% weight on it? You know, do you put weight on it in certain situations versus, you know, less weight in others? It seems like others are struggling with these same questions, same issues. Okay, any parting thoughts before we close this session out? All right. Well, definitely want to thank again Mark Russo and Riskpulse and our other special guests, and also of course the students. I thought this was a great discussion, and we'll post this online in just a little bit. And Mark, I hope you can join us again, maybe before the end of the winter. That'd be great.
Yeah, appreciate the invite, and yeah, looking forward to be back. And thanks everyone for their time here.
All right. Thank you, guys.
All right. Thank you.
Thanks.
Bye-bye.
Bye.
Bye.